the head trader at Elite Trading. I just wanted to let you guys know that I just dropped like the part number 2 of our previous lesson, the best reversal candlestick patterns. And guys, I just want you to please pay attention to little details. Trading is easy. It's all about the details. I don't want you guys to be biased and just buy what I said. I want you guys to choose like tickers that are traded by institutions and just go through the history and see how many times, like the hammer candle failed. How many times, the inverse hammer failed or reverse candle. So people call it, both ways. So it doesn't matter. And then make your own conclusions. Right? So I wish you guys nothing but the best. A happy new year. And I'll see you guys next time. Hey guys, Billy Ribeiro here. It's a pleasure to be here with you guys today. For those of you that don't know me, I am the head trader at Elite Trading Live. And today, so it's the continuation of our previous lesson, the best candlestick reversals, right? So let's just get right into it, right? So for the hammer doji candles, right? So it was, like 5 out of 20 failed, which this would have been a 75% ring ratio. And that's just by, right, blindly, taking the pattern, blindly taking the trade, right? Not looking at anything else. So for the inverse hammer, it was 3 out of 12. It was at a 33%, 33.7, 34%, something like that, right? 3 out of 13. So it wasn't as good. And as we know, we were using the same ticker here, right? Baba. So now let's find out what you could have done in order to, right, what to look for in order to just like take the trade or not take the trade, right? The things they need to do. So let's look at why the hammer dojis failed. Let's look at the hammer dojis that failed, right? And mark them. So the hammer dojis that failed, this one failed. This one is just a doji. It's not a hammer. Let's look at another doji hand. This one did not fail. This one failed, right? But and then it took a new high there, and we had 5 that failed. So we have so yeah, we can. Yeah, this one did not fail, right? Because you took a trade here on hammer doji and a gap top, right? So if you knew how to get out, identify this as so the resistance, right? This top here as resistance, you would have gotten out, right? Or at least like sold most of them over there, and then let the trade take you out, right? So this did not fail. This here failed, the hammer doji. And so far we have, because this was a hammer doji, but this is also known as a screw bar candle, right? We'll get into like these other like setups, like later. This is called a screw bar candle, which means this is a right big reversal, and you could consider this like I guess a hammer doji as well if you want to. So okay, so right, so what is the best way to to make you take the trade and not take the trade, make the trade a winner or a loser? Let's talk about this case over here, right? So hammer doji, we had the hammer doji, and what we're gonna do is support, right? And what do we do here? So we look to our left, right? And then we're like, okay, in case this failed, where would it be a good support for this to hold? So we have this gap here that needed to be filled, right? So because remember, it's like this here has never happened, right? It's like that had never happened. So, and then also this level here as well. And then you're like, okay, there's a gap close here, 73.97 to 74.67, right? So, and then it looked to the upside. Okay, so the support is at we're talking about the entry at 76.81, or let's say because we didn't know until the end that this was a hammer doji, and he took the trade at the end of the day. Okay, this is, I'm gonna do this in green. Okay, entry. Like you entered at a high of day, right? So, all right, that's the entry right there, right? And just erase this one. So that's the entry right there. So what do you do next over here? Okay, time and distance. We're gonna measure distance from this place here to the previous swing high. What's the distance? It's about $6.85, about 8%, right? So 8%, which this would have been your first target, right? 85, 81, right around there. And then what if this trade failed? So what are you risking here? You're risking max of 6.2% or $4.75, to max, right? $4.87. So we got 487. Sorry guys, so we got $4.87 to the downside, and to the upside we have, let's go back because I don't remember, like we took this at the very worst right spot, and we have here $6.79. And that's just by looking to your left into the most recent price action, to October, the month of October, right? So I'm not zooming this out, and then it's just like I just want to show you guys the potential, right? And how you okay. So even though it was like 5 reds out of 20, but if you use the proper standard risk, it would have been 20 out of 20. Because if you just apply this math, if you just apply this concept, okay, I'm gonna look into like the previous pop to the previous drop. And from where it's at, what's the risk to reward? If you have like $2 to the upside and $6 to the downside, are you gonna take the trade? Are you? But if you have 487 to the downside to 679 to the upside, is it worth risking the trade? 100%, right? And all you need to do here is give the proper standard risk, right? So a lot of people could say, but Billy, so for equity, this is too much. Guys, not really, right? It all depends on your account size and your position size. Because I know it's much easier for options, but it's still, right, for equity, it's still pretty good because it's more than 1-1. It's 1.5 to 1 at least, right? About, yeah, at least 1.5 to 1. So this is a pretty good risk to reward here, in my opinion. So, okay, so this here instead of red would have been a green one. Now let's catch another one that, okay, another one that failed. Let's just reset the chart. I'll just give one more example, and then you guys will do the homework, okay? So, okay, clear the, that one's been pretty much clear, right? So let's look at one that failed here, big time. So this one here, right? Let's say, okay, all right, this is a sort of, this is more of a handle doji than this one. This is more of a doji to me. But let's find one that's a clear hammer doji that failed here. Okay, this one right here. Even though it failed, but it didn't fail because it gapped up, right? So this one right here is a doji. It's not a hammer doji. All right. Okay, let's just consider that. Okay, this is a hammer doji that worked. Okay, inverse hammer. You know what? Let's just, okay, if you guys are in doubt, right? Because so it's, if you guys listen to 100 different, like professional traders, some of them are gonna tell you, okay, this is a hammer doji. Some of them don't. And the way I identify them, and I see which one are better, which to me it's more like about hammer doji than not. It's just by years of looking at the chart, right? How do I do that? No indicators. You guys see? I have a free chart. I don't have like all the EMAs, like so thick, right? I can give you guys crazy examples here, but okay, there's one hammer doji that failed here. This one, boom. And then let's just go back in time here a little bit. It's just okay, because this one is right, since it's right there. So this is, we're talking about this hammer doji, right? Let's just go back to a point where we could identify it, right? Because we didn't use that one as an example because, yeah, we did. So, but this one here, like at the time, it would have been more like, okay, let's just, okay, it's this candle on 10-10. Okay, this candle would have been more like over here, right? So, yeah, this would be more like your vision, right? And then, okay, what is there to recognize? Okay, we do have a trend there. Oops. I don't like cheating. I like to get it right. As you guys can see, I'm not cheating, right? So, and we had the hammer doji. 10-10. Where are you, baby? Okay, right here. I'm gonna do this in red, right? So it's easier to, okay? And then be like, okay, the entry, which the entry would be at the top of the candle, right? I'm saying it's the worst of the, like, it's the worst entry you could have taken, right? It's like the stupid, this you saw it at the end of the day, you recognize the pattern, you're like, okay, so I'm gonna take the trade, right? It's this candle right here, 10-10, right? So what do I have to the upside? Where's the previous swing high? It's right at 86.13. Where's the previous swing low? Right from here. So, okay, let's just get, because we need more data, okay? The previous swing low over here, it happens to be at this level. Okay, so I'm gonna do this in green. And then, right, okay, stop out. Right, stop out. And then, okay, we're back into the chart here. So now it doesn't matter, you know, where we're looking at it. So, okay, so to the upside, we have right from here to previous swing high, we have about, okay, $8.16. Is that right? Yeah. And to the downside, we have about $10.77. Right? Is it worth risking the trade? Oh no. Hang on. To the upside, we have about, right, $8.64 to the previous swing high. That's from the bottom, but actually we're looking at the top, right? It's like it would be the worst entry ever. We're looking at $6.31. And to the downside, right? Because remember, it's like this was all the information that we had here. This candle here is your last day. What did it have here? What was the risk here to the downside? $1.61. Was it worth like risking taking the trade? Yes, absolutely. Right? And what would you have done is, okay, a break at this previous swing low, you're out. But the risk to reward was here, guys. Do you understand? So the risk to reward was right here. Right? It was right here. So, but now, okay, we're just trading, you know, blindsidedly. So just looking at the charts, right now, looking at the ETFs, we're looking at a lot of important factors, right? And the news, this is a Chinese stock, right? But this is, okay, what we had here. So to the upside, right? And this is what we had here to the downside. It could have, right? Boom. Because remember, it's like this price action here doesn't exist. Right? Scratch this off the board. Right? Like this was the last day. So, and okay, and then it's less than $1, right? I know it's like $1.56 to the downside to get like over 6 points to the upside. Is that a good risk to reward trade? Absolutely. You know, keep your, you know, and one of the things that you could do too is this, right? So, okay, you got a hammer. So what do you have to the upside? Okay, you have like, to the upside, you have like I'm gonna count like actually the bottom of the candle here, right? I mean the close. You have about $7 and 29 cents. Then you go from here to $7 to here. You're getting pretty much like right here. You're pretty much going 1-to-1. You can do that as well. Most of the times it's gonna work. At this time, it wouldn't have, right? But like I said, you guys gotta look at the whole thing, right? Not only at one thing that failed. So what's the status overall, right? So and that's how you guys figure out, like, if it's a good trade to take or not. Just like, instead of just taking blindsidedly, right? And you guys saw that there are trades that, okay, it failed, but it didn't fail, because all you need to do is give the proper risk to reward. So a good way to look at this is, okay, what's the expected move for the week? You can give the expected move as a risk to reward. You can do that, no problem, right? So that's basically it, guys. So right, I'm not gonna get too deep into it. And then I just want to give you guys, right, I'm giving you guys the blueprint, showing you guys how to, right, how to get the work done, right, and giving you guys the tools, right. It's going to be up to you guys to develop it or not, right. And that's it. So I guess, like, we can go like so much deeper into this, guys, but if you guys want to really know everything about trading, everything about fake outs, institutions mindset, right, and how to eliminate, how, like, to get all the odds, like most of the odds in your favor, like, I have a course coming up, and you guys can join the the room, and we'll dive into it, right. So it's just like there's so many pieces of the puzzle, right, but it's simple, right. But I'm giving you guys a concept. Now it's up to you guys to develop it and make it your own, guys, right. Go through the chart history. Don't be biased. Don't listen to me, right. Go through the chart history, apply the same system, the same concepts that I just talked about, and then make your own conclusions. Like, let the status speak for itself. But once again, this is not for penny stocks. I don't trade pennies, I trade points, right? So you guys that trade penny stocks, so this is not what I'm talking about here, right? For that, there's a strategy. There are strategies for that, a whole bunch of strategies that really work. So, but I'm more of an options trader than equity. So, and I stopped trading penny stocks like years ago. But guys, please, if you guys enjoyed the lesson, please just like, subscribe, share with your friends, right? Comment. Just give us, help us out. Just get the word out there. You want to help as many people as you can. And next week we have a huge announcement, right? So I think I already told you guys about the only guy in the world that knows my system to its T, right? My former student, Freddie Ferber, he studied under me for 3 years in a row, every single day. So he joined the team. So he's going to be working with us. And listen, if by the end of 2023, we're not the #1 trading company in the world, I don't know what to tell you guys. So I'm coming for everybody. I'm going to be everybody, because I want to help the most people as I can, right? If you guys are a minimum wage employee or a Wall Street trader that's struggling, this is the way for you to come. Come see me. EliteTradingLive.com. All right, thank you guys. You guys have a great rest of your day, morning, night, evening, whatever. God bless and Happy New Year. I'll talk to you guys.
You're like a circle that floats around me, keeping me safe inside.